Hello, it's Thursday the 16th. I'm FxPlew and this is the market brief. So there's plenty of debate around when the MPC will cut rates as the data keeps throwing up reasons to delay. We had 0.6% growth in Q1, which is by no means spectacular, but it did confirm that the higher rates are no longer driving the economy into a deeper recession. This has taken the pressure off the MPC and given them some very welcome wiggle room. April's employment data confirmed that unemployment is beginning to rise, but not to a point of concern for the MPC just yet. However, where average earnings remain unchanged, this is still at a level that is too high for most MPC members to consider a rate cut just yet. Most of the G7 saw inflation fall at a pretty healthy pace until February or March this year, where economies seem to have adjusted to higher rates, and so inflation has become that little bit stickier. As such, the idea that the MPC will deliver a June rate cut is dissolving into them adopting a wait-and-see approach. And with a little more uncertainty added to the debate, it has brought a little more activity into the markets too. And that's no bad thing. There is growing uncertainty in the US as well, where the market was getting used to the idea that interest rates may not be cut at all this year. The data has now started to show signs that the economy is slowing down, and that has brought the idea of a rate cut back into the debate. Much of the confidence was centred around the consumer. Q1 consumer confidence remained high and elevated interest rates seemed to be unable to dampen their demand. However, Q1 might have been a little misleading and there could be a delayed reaction to the higher rate environment. That's the new theory that's floating around after retail sales came out flat for April. Zero growth after a 0.6% gain in March. We also had CPI inflation data out yesterday, which confirmed headline inflation dropped just 0.1% to 3.4%. Core inflation also fell to 3.6%, down from 3.8%. So there is a little progress, but it is a little sticky. The market reacted more to the retail sales data than to the 0.1% drop in inflation, and that saw the dollar sell off yesterday. Sterling rallied to 126.85 and the dollar index dropped to 104.30, which is a level not seen since mid-April. We kick off this morning from around 126.75 against the dollar, 116.55 against the euro, and euro dollar is around 108.75 on the open this morning. That's it from me. Have a great day.
If you do not have a clue, then just tweet through and ask FxPlew.